We have all been there. You buy a stock, it goes nowhere, you sell, and the next day it rockets. Or you spot a massive rally, finally jump in, and immediately buy the top. To capture the market's biggest moves, you need to stop staring at price and start measuring pure velocity. That is exactly what an indicator called acceleration bands does. Instead of tracking where an asset has been, it tells you exactly when the price is gathering speed. By the end of this video, you will know how to configure these bands, identify confirmed breakouts, filter out false signals, and set up a rigid mathematical exit strategy. Go ahead and open your preferred charting platform right now. Pull up a stock you watch regularly so you can follow along. Systematically capturing momentum gives you a repeatable set of criteria to follow. It allows you to ride the strongest part of a trend based on specific data points rather than a gut feeling. Step 1 is getting the tools on your screen. Go into your indicators menu, search for acceleration bands, and apply them. While you are there, make sure you also have a standard volume indicator active at the bottom of your chart. On your chart, the indicator generates 3 lines: a green upper band, a white middle moving average, and a red lower band. These outer bands act as a container, holding 95% of normal price actions safely within this shaded boundary. If you have used Bollinger Bands, this might look familiar, but the math is different. Acceleration bands skip standard deviation entirely. Instead, they calculate the high and low price ranges over a specific period. Anytime the price breaks completely outside that 95% boundary, it is no longer behaving normally. It is experiencing a distinct anomaly of acceleration. Mapping this boundary provides a baseline. It turns price action into a series of objective, measurable events, replacing subjective guessing with a defined technical framework. When traders see a stock surge rapidly, the natural instinct is to assume it is due for an immediate pullback. This indicator demands you ignore that instinct. For a valid bullish entry, focus entirely on the green upper band. Wait for a single candlestick to close completely above that line. But one day isn't enough. You need a second consecutive daily close above the band to confirm your entry. The exact same logic applies in reverse if you want to short the market. You simply look for 2 consecutive daily closes resting entirely below the red lower band. Demanding this 2-day confirmation protects your capital. It filters out the random one-off daily spikes and ensures you are committing to a genuine, sustained shift in momentum. No indicator is flawless. The main weakness of acceleration bands is that they can throw false signals, often called whipsaws, when the market is trading sideways. To protect yourself, run 2 specific filter checks before taking any entry. The first is verifying the structural slope of the bands themselves. Look at this split-screen comparison. On the left, a breakout happens on completely flat bands with minimal volume. Skip this setup. On the right, bands curve sharply upward, signaling a sustained move, and are backed by a towering volume spike. That spike validates the breakout. High volume acting in tandem with an upward curve proves that heavy institutional players are actively pushing the stock. Combining the slope and volume requirements filters out static signals. It limits exposure to choppy markets, keeping your capital focused where massive volume drives speed. Entering the trade correctly is only half the battle. Many traders sabotage their success by selling a winning position far too early, lacking a plan for when the run ends. Your rule for staying active is simple. As long as the price continues to hug that outer band, the trend is intact and you hold your position. Look at this uptrend tracking along the upper band. Your strict, non-negotiable trigger to take profits occurs the moment the price drops back down and touches that white middle moving average. When the price returns to that middle line, it signals a structural shift. The period of pure acceleration has concluded, and the market is now entering a consolidation phase. Executing this specific exit replaces hesitation with a preset protocol. You secure your position at the exact moment the mathematical momentum signals a slowdown. You now have a functional trading engine based on 3 clear pillars: the 2-day entry breakout, the slope and volume filter, and the middle line exit. You have moved from making subjective guesses to following an objective visual framework. This approach means you can stop trying to predict market tops and simply react to the data as it unfolds on your chart. Right now, apply acceleration bands to 3 of your favorite stocks. Scroll back through the last 6 months of data and identify where these specific setups happened in hindsight. Once you see the patterns, the data speaks for itself. Focusing on the measurement of speed allows you to follow the strongest trends of the year with a consistent, data-driven approach.